Hey everybody, good morning. Marty Missouri here, 1st of August 2019. Promise, just going to keep you for a couple minutes this morning. Couldn't help but share with you our live chart this morning, candle chart for the S&P 500. Below here is the MACD and the RSI. This is implied volatility. This is an options pricing metric. So I don't have the on-balance volume like I normally do. That's rolling over a little bit yesterday, of course. And then the dip into the weeds that I took you on the last video, 2 or 3 days ago, all of those indicators are still very much in place. In fact, I could add another one on sentiment that's a little concerning right in here. So all of that stuff that I suggested tells me that we could get a noticeable resolution lower out of this upward sloping wedge is very much still in place. But nonetheless, today we are trying desperately, or the market is, to get back into this trend line. Right now, as I speak, and this is a live chart, the S&P is just right on it after breaking down and closing noticeably below. If this continues to break out and the market falls lower, we're going to see, I think, more of that short interest come in and stop losses get hit. Ironically, probably right here along this this support line, if indeed that does come to pass. You can see if I extend that both left and right, that could be a pretty significant level right in here. This is looking, somewhat like the wedge pattern that we had back here before that May sell-off. You see, we got a break below. We came back, retested it, actually closed back in there before we came off of it and closed lower. Don't know that that's going to happen. We do have a similar look here in a number of ways. We had a divergence in here, less of one in here, and so forth, and then a worse look in terms of volume. And we had those other things signaling right here that I showed you the other day. So folks, for today, what we had was we had a Fed that gave the market what it wanted in terms of a quarter point. And then we had Jerome Powell, frankly, being honest. If things continue to progress, no need for further cuts. That would be good news. Under an ideal market environment, that would be something for the market to rally on. Instead, it fell apart yesterday. This morning, we got a weak Institute for Supply Management numbers. Not good for the economy, not good for corporate earnings, and we had the market begin to rally. Then we had the president's latest soon-to-be nominee for the Federal Reserve equate today's global environment with the 1930s, and that's all the market needed to hear to just shoot higher and really challenge yesterday's level right in here and challenge this trend line. I know it feels good. I don't mind it a bit because we're still very much exposed to the market. And if you read my earlier blog post today, I suggested that no, it's probably not the end of the bull market, that the prevailing bias is still higher. However, the underlying trend, in my view, that's the fundamentals, is trending lower. So if the prevailing bias catches down to the trend, we're going to have some pain. If the trend reverses and catches up to the underlying bias, we're going to continue to melt higher into all-time high territory, which was my thesis, months to a year ago. Not any longer amid the global geopolitical, if you will, uncertainty. Definitely quiet on the US-China front. It's about to heat up on the US rest of Asia front, and ultimately on the US European Union front. There's nothing in the rhetoric that suggests the administration is the least bit interested in letting up on protectionism. And that's unfortunate as it relates to prospects for the market. So I'm not saying that the imminent double-digit correction is due this week or even this month. I said in the last video, it could be a month from now, it could be 3 months from now, and I said I would be surprised if we don't see some noticeable resolution lower in here. Today just confirms that bad news is good news. So again, not to be a big party pooper or rain on anybody's parade. I'm just telling you the basis for what's going on here is not something that we should feel great about. And frankly, I think to get to a better fundamental place, ironically, we need some of this froth to get burned off of the market. And I think in the process, it'll inspire better thinking when it comes to some of the geopolitical issues that I currently am concerned about. I'll leave it there. Thank you, as always, for watching and listening, and much, much more to come. Have a great day. Bye bye.